Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Saturday, October 25th, 2014, and this is the weekend edition. We're going to take a look at the market the way we normally do, and in addition, we'll look at the weekly bars, and we'll look at the indicators, some ETFs, and the stocks in focus today are Expedia, Green Mountain Coffee Roasters, or I guess Keurig Green Mountain now, LULU, and Whole Foods. Okay, the Dow Jones was up 127 points on Friday, so this move has continued to bounce back. We're still right here at this trend line, and I know I put out a chart on my website and tweeted and talked about the kiss goodbye, because it looked like on Thursday the move came up here, kissed this trend line, pulled back down, and was getting ready to pull away. A little premature. We're still here. That doesn't mean this isn't still a kiss of the trend line. I'm going to still call it that, but it may go deeper on us, so we'll look at it. And so what you're seeing here is I got a lot of stuff. Let's talk about, I'm going to talk in my post, and you may have already read this, depending on if you looked at the post or the video first, etc. This is a leading expanding triangle, okay? And I'll talk about that. And the reason this, a lot of times, and Prechter even talks about this in his book, the Bible on Elliott Wave, that sometimes analysts will get confused in calling this a 1-2, 1-2, 1-2 series, which I did because of the 5 waves that I was seeing during the day, the 5-wave structure down. But in reality, when you have an expanding triangle like this, you also have 5, 3, 5, 3, 5, okay? And so the expanding triangle actually fits this scenario. Got to get a drink of water there. Okay, actually fits this scenario a lot better than what I was trying to do in terms of my wave count. So I feel a lot more comfortable. I know I was getting very unsettled in terms of the way I was feeling about what was happening because, there for a while things were looking really good, and then all of a sudden the wave count was going wacko. So this really fits the scenario so much better in terms of what we're doing. Now, the thing about a triangle like this, especially when it's leading to the downside, you are going to get a deep retracement. So the real question is, how deep is a deep retracement? We've already gone slightly beyond 61.8%. Actually, at yesterday's high, it is 64% exactly. Now, I've got 2 other markers here. Okay, so that's what you're seeing on the screen. Okay, it's hard to grab this. This is where you get these little nuances of some of these trading softwares, and I have a hard time grabbing this unless it shrinks down. But what we're looking at is the measurement from up here all the way to down here, okay? And that is 1,495.52 points. That's the entire from intraday high to intraday low, 1495.52. And we have now, let's go back up here. Okay, so the dotted line here is 70.7% would be my next threshold, and then 78.6 as a target. And 70.7 is at 16,912. We closed at 16,805, so that would be another 107 points up. And 78.6 is at 1730, okay? So that would be another 225 points up. So that's my range. We may have gone as far as we're going to go. Now, when I look at the waves internal here, I'll tell you that in this last few days, we're starting to see significant divergences on the 30-minute, the 60-minute, and the 10-minute charts of the Dow on an intraday basis. Okay, so divergences are starting to show up. We may have gone about as far as we're going to go. We may push higher. We just got to continue to watch, what's developing. But I'm still convinced that we've broken down out of a large ending diagonal here, and this is the first wave down. Now I'm going to take you back to 2007 for a minute. Okay, so this is the Dow in 2007. This was the high in October of 2007. Here was the first wave move down that I think comparable to what we just completed, okay? So I said we made 1,495 points. This was 1,474 points. Notice how there's a fairly clear 5-wave move in here, okay? It actually started to be somewhat of a leading diagonal also, but I still think I can see the 5 waves a little clearer. Now, here's the wave 2 back. And this wave 2 retraced from intraday high to intraday low, 71.6% in 10.5 days. Okay, then it just rolled right on over, and you can see the move that we got here. Now these are minor waves. Minor wave 1, minor wave 2, 3, 4, 5, and then that completed an intermediate wave 1, what I'm putting like this in brackets, okay? That was the start, okay? So we had a 5-wave sequence down in intermediate, and then we started, and and then of course we're all familiar with what happened in 2008 and into 2009. But this was the beginning, and so now I'm watching to see how do we play out as compared to this. Now nothing is ever going to replicate exactly the same way, okay? But in terms of the wave structure and playing out, it's kind of interesting. We actually did this instead of 32 days, we went about the same number of points in 19 days, and we actually went to 8.6%, not 10.4%. So percentage-wise, we didn't go quite as deep. All right, let's go back to current time. Okay, so here we are back, current day on the Dow, and you can see now how 1, 2, 3, 4, 5, 6, 7 days. Okay, we've been 7 days in this bounce. And you can see back in 2007 that wave 2 was 10.5 days. So yes, we may continue to push a little bit more. We're just going to have to continue to watch this. All right, let's take a look at the S&P 500. Very similar thing. You can see that its percentage bounce back has been a little bit more than the Dow. The NASDAQ, same thing, a little deeper. New York Composite. To me, there's a fairly clear 5 waves here. It's a little different than the Dow Industrials, and it's not quite as deep as the Dow in terms of the bounce back. And then this solid trend line is that trend line up for the bottom of March 2009, okay? So it's pulling back to that trend line, it looks like. Now, it's going to be interesting to see, does it get resistance in here at this double top valley in here, okay? And it may be not just be the intraday low, it may be where it closed. And where did it close? At 10,583. Where did we close Friday? 10,582 point, almost 10,583. So let me draw a little line. Give me my crosshairs back. And we go at the close of this bar right here. You bring it across, and I'll create that as a resistance, potential resistance line. So you got a little bit of a zone, and I can bring this one across, and we'll see whether or not right, extend it. Okay, so we're at that point, we're at that zone. So we'll see whether or not we continue to push more. Russell 2000. Actual wave count in here, what it's doing, I'm not really sure, and I'm focused more on the Dow Industrials. I've got my hands full with the Dow. I mean, you can clearly see we've had a pretty good little snapback in here on the Russell. And honestly, I mean, I don't focus on the Russell that much. I know some people like to day trade the Russell, and that's fine. So I actually insert it just because I know some people like to follow it, but it's not one of the major indices. Let's take a look. All right, I know what I want to do. I want to look at a weekly basis real quick on these. Okay, the Dow weekly. Okay, so again, you can see this big, large ending diagonal here, 5th wave, and we've now broken out of it. We had this bounce back up into that the bottom of the diagonal. And S&P 500 again, big move from last week on this bounce back. Still get the 10 below the 21 on the moving average. You know, we've looked at these again. We're just getting one bar more of reaction in here, one additional bar. NASDAQ weekly, a little bit stronger. acting. This hasn't really, it never took out the April low, okay, like a lot of the other indices. The NASDAQ has not taken out that April low yet. And the Russell 2000 week, wow, I'm just amazed that this thing knows exactly where I want to go. Okay, let's see. And again, you can see how the Russell's broken. This red line is the trend line all the way from the March 2009 low. So that huge trend line of a bull market has been broken. Okay, now we're going to take a look at some of the indicators. Let's look at the short-term trading index. Blue line's coming back down a little bit, but it's still right in the middle of our zone. The VIX is making me wonder whether it's bottoming or not in here. Just because of the way this RSI is acting, it's getting support in here around 40. Where did it, RSI at 42.7, RSI at 43.4. It just, I don't know. And DI plus is greater than DI minus. It will be interesting to see if we get support and now the selling kicks back in. And again, it kind of ties back into with what we're looking at on the Dow. I don't want this, sorry. I want to go to the high-low indicators. And the high-low, it's starting to turn, had a little bit of a turn down on Friday. Not much, tremendous bounce back. But again, what is that? 65 more new highs than new lows. So we're above the zero line in terms of new highs. But boy, this isn't, there was so much damage done in terms of stocks hitting new 52-week lows that you just don't have very many right now, even with this tremendous pullback. I mean, the rally that we've had, we're just, almost 1,000 points. We're still not getting very many stocks that are hitting 52-week highs. So I guess that's not really surprising. And I know I was going to mention on the 10-week the 10-week moving average of the Chicago Board of Options Exchange equity put to call ratio is at 0.70. So it's not even close to a bullish extreme or bearish extreme at this point. All right, let's take a look at the ETFs. First one is the high yield fund, and let me make sure that I'm not missing something. There it is. This had this huge spike on Thursday, and I can't remember exactly why or what happened related to that. But, again, it's bouncing back, and not quite sure what it's doing here. I mean, we're still trending down. This spike, I don't know if that was an anomaly or what, in terms of whether my data is right or on this or not, to be honest. I just don't know. Semiconductors, that's the next one. Again, bounce back. Everything's going to look the same, really. I mean, it closed this gap on Tuesday. Then it almost looked like it was getting a little reversal bar, and then it's just gone sideways. I don't even think it's taken out the high from Wednesday. 49.37. Slightly did. 49.41 on Friday. So it's just hanging in here. The home builders has had a big bounce back. Of course, it got pretty oversold. As you can see, I kind of zoomed back out of this, but you can see it was in this downward trending channel. We had this break to the downside. Now it's snapped back all the way right to the middle. I mean, it's basically in the middle of this channel. So again, downtrending, lower lows, lower highs. Nothing has changed on that at all. And then the next one is select sector financials. And again, bounce back. We got to a lower low here with this whole sell-off that we had. Now we've got this bounce back just like the market's doing. I'm not seeing any different type of a signal. Okay, now I want to move into the stocks real quick. Let's take a look at Expedia. Expedia had this big break of this trend line, and I think this trend line is well, I guess it's just about a year's trend line, and broke down. I think there's a lot of, when the Ebola crisis, people were panicking a little bit, hitting the travel stocks, the airline stocks pretty hard. we've now had a bounce back, and we're just going to have to watch to see, does it roll over? Does it get start to get resistance in here, or what is it going to do? I mean, I don't have any particular take on Expedia. We'll continue to watch it. I just wanted to zoom back out. Not seeing any type of major topping formation that I can see. I mean, sometimes things don't immediately jump out at me until I look at them a little bit. Keurig Green Mountain. Okay, this one I think is at the end of its major run. Okay, and I know if you're in Keurig Green Mountain or you own stocks, I mean, that's probably something you don't want to hear. And I'm just looking at, I'm not looking at fundamentals. I'm not looking, I mean, love the company. My wife uses that Keurig Green Mountain coffee roasting stuff every day. We got a Keurig, she's got a Keurig at her office. So I'm just looking at this from a purely technical standpoint. This looks like an ending diagonal to me. And when you look at, and the other thing, let's look at the indicators. You're getting nothing but divergence showing up with this move. Okay. And I've been waiting for this thing to roll over just because it just had that feel to it, and it has resisted doing it. And so that's, I mean, to the stock's credit, I mean, it's been strong, but it's getting, this is weak. And we'll look at the movie, let me look at that. Maybe I could see that right now. That was the other thing. When you look back, let's just, even from May, see this dotted line? This is a 50-day moving average of this stock, of the volume, okay? The 50-day moving average of this, 3.3 million shares. The 50-day moving average today, 1.6 million. It's half. So this entire move from May till now, the volume has been dropping off, and the 50-day moving average is half of what it was when it started this formation. This is classic for a diagonal, for a wedge. The volume drops off as you form the triangle. And so what I'm waiting for is for this thing to start to roll over right now. Now let's take a look at a weekly chart real quick. And where is it? There it is. This is amazing. Okay, and this is why I think it's in the fifth wave of a major impulse move. And what we're getting, okay, clearly from 1998, impulse 1, 2, kind of a complex flat, expanded flat, strong wave 3, sharp zigzag wave 4, which was the opposite of this, okay, sharp, and now we've got this fifth wave, which we're starting to get divergences showing up in here, okay, so clearly a nice 5-wave structure. This now needs to correct this move. And what's really amazing about this is the closing low on a weekly basis. Now this is split adjusted on this stock, but 14 cents, 14.35 cents a share. This stock is up based on the closing price yesterday versus that closing price that it started its bull run. It is up 908 times. So if you had invested $1,000 and let it sit with Keurig Green Mountain from 1998, at that point, you'd have $1,000 would have turned into $908,000, almost $1 million. It's been an amazing bull run. And right now, I just think it's getting very close to rolling over. And so I am going to be watching this really, really closely here because of the divergences that are showing up. And what happens, just like on the Dow with this diagonal, ending diagonal on the Dow, I'm looking for a break back at a minimum to the beginning of it, which would put it back down here to where I've got this number 4, around $95 a share, $90 to $95 a share. So we'll continue to watch that. Lulu is another one that's looking really interesting right now from a bearish standpoint. I'm starting to think, I was wondering what Lulu was up to. But now that I'm seeing this, I think there's a good chance that this is a head and shoulders forming here, okay? And mainly because, now we'll look to see. I mean, this is just a scenario. This is what you have to do. You start looking for scenarios that could be developing. And this is a scenario because I see this trend line. I'm drawing trend lines. I'm always drawing trend lines. And look how this broke down through here. It snapped back up to this trend line that I had drawn. So now I'm suspicious. Am I getting a shoulder, a right shoulder? And here's a neckline. So let's then take a parallel line to this neckline, put it up at the top of the left shoulder. Does it form near the right shoulder? Absolutely. So there's a really good chance that this right shoulder is forming right in here near the high of the left shoulder, and we're getting roll over. I'll be watching for a close down below the blue line and see if that's what we get. The next one, the last one we're looking at is Whole Foods market, and really there has not been hardly any change on Whole Foods. It is still just going sideways down here in this box. And I know we looked at this about 2 weeks ago, and this is the extent of the move. Yeah, no further major breakdown, and just kind of came back a little bit, but nothing huge. So, all right, that's it for today. I hope you felt this video was beneficial. If you did, please share it on social media. And if you're not a subscriber, subscribe. Just click on the little red box here, and first name and email is all you need. You get access to the Trade Ideas webpage. And by the way, I'll be back looking at Trade Ideas tomorrow. Things that we were in last week, things that I've developed. I haven't had a chance to look at all the stocks, so we'll look to see what may be looking good for this coming week, and we'll put that out tomorrow. So, all right, this has been Joe for Beyond the Chart. Everyone have a great weekend.